Boy, one thing I think that 2025 will be remembered by is the uncertainty that exists in our global society. Being a Canadian, we were in a bit of a bubble for quite a while, watching as the world was slowly going bananas. Well, now, in this year, that has all changed. With it has caused a lot of uncertainty for investors in many different areas of investment. There literally isn't a safe haven anymore. Today, I'm going to dig into this and possibly help light the way so you can invest in uncertain times. Frank Thomas here, Wealth Generation Strategies, and boy, these past few years have been truly crazy. There is more unrest in the world than we've seen in more than 50 years. As I mentioned in the intro, being a Canadian, we are in a bit of a bubble. That bubble burst this year, and even Canada and the United States are in economic turmoil. On the creation of this video, the date of being created, of course, the markets in general have dropped 10%, and it's been in a very short period of time. Definitely nothing like the 1929 stock market crash where it wiped out all gains made in the roaring 1920s. So not as bad as that, but definitely something to stand up and consider. Either way, as this plays out, how can you as an investor protect yourself? Today, I'm going to be covering 5 points that I follow that I not only survive but thrive in these crazy markets. Also, be sure to stick around for the bonus as I'll be disclosing what I believe is a super safe and excellent investment to purchase, especially in times like this. So let's get started. Number one is, of course, don't panic. I can't stress this enough. Don't make financial decisions emotionally. This can include selling at a loss or not selling at all, riding a stock or a asset until it's worthless. I've done it. And I know it sounds stupid, but you have in the back of your mind, oh, it'll recover, oh, it'll get better, everything's going to get better, and it never does. And your money is gone. Well, the way to combat this, in my opinion, is a twofold approach. So let's look at both. First of all, if you purchase what you believe are good stocks or ETFs that have a solid record for returns in the long run, don't emotionally sell them off. Hey, I'm sitting on about 5% losses right now in my overall stock portfolio. And it kind of sucks, but I'm not sweating it because I know I purchased things that I felt were good. But if you purchase shaky stocks, you may be tempted to ride them until they're either delisted or become worthless. And I know I'm going to get some heat for this, but one that I'm willing to mention is Tesla. I have said forever, never purchase a stock where one person has so much power and control over it. I have watched stocks plummet and become worthless because of one person, time and time again. Tesla is really controlled by Elon Musk. Whether you like him or don't like him, I don't really care either way. I've just never invested into Tesla because, wow, that's scary. And I'll tell you something, Tesla hasn't gone down 10%. It's gone down a lot more. And I'm sure we haven't seen the end of that bus. So, I don't know. That's one that I would be considering if it was in really shaky times. I actually, when he got involved in the politics here this year and started making some decisions based upon his record of when he bought Twitter, one of his first things that he did was he laid off a whole bunch of people. You're fired, you're out of here, you're gone. And then, well, he turned it to X, but either way, that's not a good sign. And when he got involved in the politics, I would have been running to the broker and sell, because I know what's coming. It's not going to be good because he's going to do the same thing. And of course, within weeks, it's played out and the stock is just taking a tumble right now because of it. And like I said, I don't think we've seen the end of this bust. So, it's up to you whether you hold and wait or you sell. But I think that if you're going to take a loss, now is the time to take it before it gets any worse. And I could be completely wrong. So you need to make that decision for yourself if you own Tesla. Number two, Diversification is king. Whether you're purchasing stocks or ETFs or any other financial commodity, you need to diversify your holdings. Don't place all your money into one stock or ETF or even a few. That's disaster. If you're investing into ETFs, do consider investing into like or same market ETFs, in other words, S&P 500, S&P 500, but from different providers. This way, it protects you from the investment company as well. Hey, you can have all your eggs in different baskets in energy and in particular ETF here and ETF there, and it's all one company. What happens if that company folds? You go broke, and you want to avoid that with all costs. So I invest into the S&P 500, but I've invested into a few different areas. I invest into properties and property ETFs as well as REITs from different companies. I also invest into into some of the stocks directly that I really believe in. So I have diversity as my protection factor. And I think that having only seen about a 5% loss when the markets drop 10%, it's a pretty good strong indication that I'm protecting myself and hedging my bets in bearish markets. To give you some idea of my strategy, I'm currently invested in roughly 35 different investment products on the stock market. Oh, also, before I forget, consider entering other marketplaces where you can invest money. Good examples, precious metals. I used to have a lot of holding in gold. I don't anymore, but I'm seriously considering it again. Consider real estate. Another one, business opportunities. Yes, business opportunities can be risky, but they can hold a lot of potential as well. I'm invested into one business opportunity, which is looking like it's going to start paying out, which is awesome. Also consider royalty products, GICs, or treasury bonds. These are all great places to lay your money in when the waters are turbulent. So consider that. And also consider subscribing and liking this video if you're enjoying what I'm telling you. It helps out the channel greatly, and if you do subscribe and you click the notification bell, you'll know before anybody else that I've popped a new video and you can watch it right away. So thank you if you decide to do that. But let's continue on here. Number 3, have a long-term perspective. If you have equities that drop in value, consider the long term always. Even the stock market crash of 1929 was completely erased in under 25 years. Now it sounds like a longer time frame, but if you have that long time frame, you're in a great position. So most losses are wiped out much faster, anywhere from 6 months to 1 or 2 years, but they usually get wiped out. But if you're close to retirement, this could become a concern. So it depends on you, is what I'm saying. With this, you can do dollar cost averaging, which is a fancy term for continuing to buy into your portfolio consistently over time, helping to wipe any losses that you may have taken on even faster. And the way that works, as the stock price goes up and you continue to buy in, what happens is now you have more and more of that particular stock, let's say, that will help average out the ones that are still in a loss position. So that's a fancy way to do it. But if you have extra cash, especially when the markets have dropped, consider investing it into the markets, but invest into good stuff. And that leads me to point number 4. You have to learn how to invest like a fireman. Savvy investors invest like firemen. They are always running to the fire and not away from it. They know from experience that the market will eventually reverse. And if they purchase good stocks or good equities, then they'll become super rich. It all comes down to investing in companies that show strong fundamentals and the potential for future growth. Don't let emotions make you run from this fire. I believe more people have become super rich with this strategy than any other, like dumb luck. I know a guy who made a lot of money with the Canadian stock Shopify, but that was dumb luck. Even he's willing to say he bought some shares and they took off. So you can't trust in dumb luck, but you can trust when the markets fall, if you're buying good equities, that they're going to come back up, especially if they've shown that they've done that in the past. Number 5, maintain a liquid fund. Downturns can be especially hard for people approaching retirement, and they're required to sell stocks to pay for their expenses. You need to have a portion of your investment portfolio that's relatively liquid and easy to get to. Consider safer ports of call temporarily, such as government bonds. Aren't strong payers, like in other words, they don't have high returns, but they do hold their face value. Keep a section of your money for very short-term emergencies in a fund such as a high-interest savings account. Now, I'm not one to hold a lot of money in a savings account, but there is a place for it, especially for your emergency fund. Finally, as you approach retirement, consider moving your investments into dividend-based equities that will help pay a known amount regardless of the value of the underlying asset. This way, you are never pushed into a position of selling off when prices are low. Because I've already had people ask me that. What do I do? I have to sell my stocks at a loss right now, and it's really going to take a bite out of my retirement in the long run. If they were in dividend-based equities and the dividend by itself paid more than enough to cover their expenses, they're laughing no matter what. And that's exactly how I built my portfolio. So consider it. Now let's jump to the bonus. And this is what I think is probably one of the most valuable parts of this whole video. What are the best assets to invest into? This section, I'm going to be straight up, is my opinion, and I recommend that you do your own research before moving forward in any direction. With that covered, I believe that if you're looking for a way to be safe in all markets and don't mind gains that are a little smaller on the dividend return, focus on investing into dividend aristocrats and kings. They have a strong long-term record of actually rising with the market and have consistent dividend payouts for at least 25 or 50 years. The aristocrats 25 and the king is 50 years. Make it personal by investing into stocks for products you use regularly. If you drink Coke products, then invest into Coke, for example. It's really easy to find these stocks. All you have to do is Google dividend aristocrats, dividend kings, and it'll come up a lot of great stocks you can invest into. But the cool thing is that they're very safe. Another one that I think is a fairly safe area to invest into, not as good as what I've already mentioned, but is into energy stocks, because everybody continues to need electricity, natural gas, utilities, that such. Again, they might actually give a slightly better return, but they do have a little more hit when it comes to bad news, good news in the marketplace. So just know that. Also, be sure to avoid my $1 million mistake. Yep, it's a doozy. And if you want to know what it is, be sure to click on the video that you're seeing on the screen. Otherwise, Frank Thomas here. Take it easy. Don't freak out. Don't panic. It's all going to be good one day. Be sure to continue investing, and we'll see you in the next video. Thanks for joining me today. Bye-bye.